How do you get the money? How do you get the big money? All right, a couple focus items here. Number one, having clean financials is paramount to getting a quantity of buyers to look at you and to get quality of buyers. And what that means is to make sure your P&Ls are clean, they're broken out, and that you don't have things on your P&L that do not belong there. The more broken out you have your P&Ls as well, the more you can actually measure what your margins are on those various items. So you don't want to have one line item that says total income. That is bad. Make sure to have many line items that break out the various income metrics that you have, and then have the cost of the revenue, cost of goods sold, and take a look at all of that. Follow your take rate. That's very important. What buyers are looking for currently is kind of what you're bringing to your company. You don't need to have your owner rents on your P&Ls. That's very important to take a look at those for trends, for KPIs, but those don't need to be on your P&Ls. Those can be in your booking reports. Please don't have advanced deposits on your P&L. Please don't have advanced deposits on your P&L. Have that on your balance sheet. Do not have it on your P&L. Taxes, they don't need to be on your P&L as well. Another thing to focus on, once again, these are all easier said than done, so I understand this is harder to actually do in reality, but focus on growth. And two of the most important reports that buyers are looking for are a units gained, units lost report by month. So they want to know every month, how many units are you onboarding, and how many units are you losing? And the ones that you're losing, keep track of the reasons for that. You can have a cute little pie chart that shows like home sold or whatever, we fired them or competitor stole them. Buyers want to understand gross added, gross lost, not a net number. They want to understand reasons. So if you're not currently doing that, I would start doing that today. The other very important one that I've talked about a couple times is the pacing report. That's one of the most important reports buyers will be looking for. Some PMSs are better than others at providing this data. Key data is a great tool if you don't use it to quickly look at these KPIs. And you can break them down as much as you want, but on a very high level, keep track every couple weeks, every couple days, however you want to do that, but keep track of what your advanced bookings looks like as of today versus as of today last year. And you can look at that as rents, you can look at that as ADRs, occupancy, you can break it into cohorts, you can look at 2-bedroom homes, you can look at 3-bedroom condos on the water, and just the more you can dig into that, the better. The last focus items here are staffing. As I've mentioned a couple times, this is vastly important for the go forward. Most of the buyers today, if they're buying you, they're likely not going to be in your market. So they're going to rely heavily on the staff that you've created. Most of these are not operators, they're financial buyers. So focus on building a staff around you. Try to slowly remove yourselves from the day-to-day. I know that's pretty much impossible, but slowly get yourself out, delegate. If you're going to focus on things not to do, to try to delegate on, have someone else be the primary contact for the homeowners, for the homeowner relations, and then slowly start to build out kind of your level of directors or managers. The more that you are a necessity to your company, the longer a buyer will require you to stay on board to assist with the transition. The whole point of selling your company when the time comes is not to work for somebody. So focusing on building some of those people out will definitely help you in the long run. The owner contracts are incredibly important. That's the assets of these companies. There's a couple clauses that are very important for these deals. I would say about, well, right now it's about 50% of the deals are asset-based deals, and the other 50% are stock-based deals. If it is an asset-based deal, the contracts need to be assignable. If they need to be assignable without the written consent of the homeowner. If that's not in there, or if it says they are not assignable without the written consent, then you will have to get every homeowner on your program to sign off that they're cool with ABC Capital buying your company. And a buyer will likely have contingencies on the deal saying that, hey, if 25% of the homeowners say no, then your purchase price goes down 25%. And nobody wants to deal with that. Technology stack is very important as well. I'm not up here to tell you like what are the 5 best technologies in the country. There's a lot of best in class, and all I'm saying is make sure you're staying up to date with which are some of the best ones to use. And a great way to do that is to ask your peers, ask people here at the conference, ask people that you respect across the country what they use for guest communication, what PMS they use, and stuff of that nature.